Are you tired of getting denied for funding? Right? Listen, there's nothing that's more aggravating than you having the 700 credit score, your credit profile is on point, everything is all set up, and you've been anticipating the moment to get approved for funding just to get a big fat rejection from your business credit card company or your business lender. Listen, in this video, I'm going to go ahead and share with you some of the things that you may be unaware of that is preventing you from getting funding. And with this video, it's definitely going to help you out to be able to start turning those denials into approvals so you can be able to go ahead and get your business to the next level. So, as always, stay throughout the entire video. Let's do it.
This conversation about building up your blueprint. It's time to take it cause time is wasted. Go grind and chase it, don't lose it. This generation need integration with information to move with. An inclination that is abiding in entertaining improvement.
Hey, what's good, Blueprint Nation? Welcome to another dope episode of the Respect My Blueprint show, where we go ahead and give you all the tips and strategies on how to be able to go ahead and level up your business, personal finance, and more importantly, give you the blueprint on how to do shit around here. All right. Now, today we're going to go ahead and dive into a silent killer for a lot of entrepreneurs out there, and that is having a weak business structure. Okay. And this is something that a lot of people are unaware of when they're attempting to be able to raise some capital or get some funding for their business is that, they think they have all of the boxes checked, but 9 times out of 10, they don't, and they're getting rejected when they're going to apply for funding, right? And think about it, there's nothing that's more frustrating, right? You got your LLC set up, you got your logo, you already have a couple clients that's on standby, ready to go ahead and generate some income. But guess what? You apply for funding and boom, denied, right? So this episode is definitely for you because in 2025, believe it or not, having good credit is just not enough to be able to go ahead and get approved for funding. Lenders are funding properly structured business, not those with just credit scores. So it's very, very important that you pay attention throughout this entire video if you're someone that's looking to be able to get funding for your business, as I'm going to go ahead and drop the blueprint for you to be able to get funding for your business. All right. So first things first, let's go ahead and start off with the basic. And this is the most obvious one right here, which is the business structure of your business. Okay. So the structure pretty much, this right here sets the foundation and says how serious you are in being able to go ahead and have your business properly organized, and also how serious you are about your business. Okay. Now, there's different types of business structures out there. We're going to go over each one quickly. But of course, I just want to go ahead and reiterate this. Okay. This is only for entertainment purposes only. All right. I am not giving any type of financial advice. Do make sure that you consult with a financial consultant, a CPA, or a lawyer to be able to go ahead and make sure you get your business properly structured. Okay, so let's get that disclaimer out there really quick. All right, so here's the breakdown. Now, there's the typical common business structures out there, which is number one is your sole proprietor. Okay, now this is pretty much the simplest structure that you can set up. It's very straightforward, and this is when you and the business legally become the same, where both of you are pretty much one, are intertwined. All right. You really don't need any formal registration when you're setting up a sole proprietor, as you would be considered as a sole proprietor, and you will be using your social security number versus the EIN number when setting up your business as well, too. Okay. Now, one of the major downfalls of setting up as a sole proprietor, as you can imagine, because you're connected with the business, is that your personal liability is attached to the business, meaning your personal assets, such as your house, car, savings, and everything like that, are all at risk for anything that happens with the business. So it's very, very important to be mindful of when you're setting up this type of structure that you are putting yourself at risk alongside of the business in the event that anything that happens. Okay. Now, the good thing about setting up as a sole proprietor is that the profit and losses are reported on your personal income tax return. So this is pretty much considered like a pass-through taxation, because obviously, again, you and the business are sharing everything. And of course, this gives you the ultimate control of your business, because business, of course, is combined with yourself personally. All right. So the one downfall that I do want to mention is that funding can be a little difficult to raise capital for this type of business structure if you're looking to grow the business, because again, most lenders, investors, and everything like that would want to be able to go ahead and separate you from the business. So that's something that you also want to take in consideration is if this business you're looking on scaling or growing in the future, you may want to be able to go ahead and keep in mind that you're going to want to make that separation. Now, another popular option that a lot of people are aware of and people set up their business under, which is called a limited liability company. All right. Now, this offers a hybrid blend of corporation and partnership benefits, right? Now, with an LLC, you are provided protection from the business personally, and it shields your personal assets from any business debts or lawsuits that may be experienced from the business. Okay. LLCs by default are taxed as pass through entities, which means the profits and losses are reported on the owner's individual tax returns. However, LLCs can elect to be taxed as either a C corporation or S corporation, which gives you a little bit more flexibility as well too. All right. So now, when it comes to registering as an LLC, I would highly recommend to look into this option as this can enhance your business's credibility compared to a sole proprietorship. And also, this allows you to add unlimited members or partners within the business, which can be individuals, corporations, other LLCs, or even foreign entities. So it's very, very important to see which category that you fall under and make sure that you are setting up your business under the right category as well too. All right. So now that we have talked about setting up our business under the right structure, let's go ahead and pull back the curtain because it goes more in depth as far as what lenders are looking into when it comes to having your business properly structured. Okay. Now, like I mentioned, the lenders are just not looking at your credit. They are looking at the entire totality of your business and do you have a properly formed and structured business? And this is some of the things that they're evaluating when you need properly structured. All right. Number one, your business address. Okay. Listen, having a P.O. box can be one of the biggest red flags that you can have for your business, right? You want to be able to have a physical address for your business outside of your home address. Now, if it is a home based business, that's completely understandable. Okay. But if you can make the minimal investment to be able to set up a small office or even a virtual office, that can also be a great benefit for you as well too, because that's going to increase the credibility of your business of having a separate location and having a dedicated business address for your business. All right. Now, also, number two, do you have a business phone number listed for your business? And of course, you don't want to use your personal cell phone. All right. Now, there's plenty of inexpensive options out there, such as Grasshopper, Ring Central, where you'll be able to go ahead and get a dedicated business line. And you can even attach this business line to your personal cell phone or forward it to your personal cell phone. But the most important thing is that you're having a dedicated separate business phone number for your business, which of course will further enhance the credibility of the business and shows to lenders that, hey, this person is actually serious about their business because guess what? They're not using their cell phone to conduct business calls. They actually have a dedicated business phone number. So it's very, very important that you go ahead and make the investment of getting the business phone number. All right. Also, getting an EIN number, all right, which stands for Employer Identity Number, which to be honest with you, this right here serves like sort of like the social security number for your business. Okay. Now, an EIN number, you could obtain this 9-digit number directly from the IRS, which this is a number that identifies your business within the Internal Revenue Service. Okay. Now, you can go ahead and obtain this number absolutely free by going directly on the IRS's website. But this is a very important number, which number one is required in order to open up a business bank account for your business and also to identify your business in the eyes of lenders as well too. Okay. Unless you're a sole proprietor, then you're going to be 9 times out of 10 using your social security number. But if you are setting up as an LLC or a corporation, then of course make sure that you do have an EIN number, which again is absolutely free as well too. Okay. Now, another thing that a lot of entrepreneurs I see are unaware of is what NAICS code does their business fall under. Okay. Now, this code right here is typically the category in which your business falls under, the type of business that you're in, and the services or product that it offers, right? Now, this right here, you'll be able to go ahead and search the NAICS code for your business by going on either ChatGPT or just Googling it. And you'll be able to go ahead and recognize what is your 6-digit NAICS code. All right. Now, if your business falls under a high risk category, there are several of them out there, such as, if you're in the cannabis field, in the adult field, or if you're selling things such as ammunition, or even high risk categories such as trucking, real estate, this can be a potential red flag for lenders, as again, they may see your business as a high risk category. So you may want to make sure that you categorize your business in the right category so you don't automatically flag your business as a high risk on falling under the wrong code. Try saying that 3 times. All right. Also, time in business, right? Now, this is where I see a lot of entrepreneurs also are falling short here is trying to apply for funding as a new business. Now, typically, listen, of course, if you just came up with your business idea recently or not too long ago, there's really nothing you can do about that. However, once you have came up with an idea of a business concept and you are seriously moving forward, I highly, highly, highly suggest to go ahead and get your business incorporated. The sooner that you get your business incorporated, the more that you're giving it a track record and the more that you'll be able to build age for that business. Lenders really want to see businesses in existence 6 months, at least 6 months to a year before they really take you seriously and give you any type of funding, right? If you're under 6 months, it may be very difficult for you to be able to get any type of funding. But listen, again, this is something that you definitely want to be mindful of. Of course, like I said, as soon as you're ready to go ahead and get your business started, get it set up, get it registered with the Secretary of State, get your EIN number. So therefore, you are building some track record with your business. All right. And also, making sure that you're building consistency with your business, right? Opening up a business bank account. Now, once you have all of these things in place, opening up a business bank account should be one of the next mandatory steps because what you want to do is start establishing some financial history for your business, right? Whether it's being able to go ahead and get some business bank statements, attaching payment processors or third party processors such as Zelle, Cash App, and be able to start getting some financial transactions to flow through the business bank account. This is going to be a great sign to lenders that, hey, this is a business that is actually generating some revenue, actually generating some income. So let's be able to go ahead and see if we can go ahead and inject some capital into this business to be able to get it to the next level. All right. But with these tips and strategies, this right here, I believe, ladies and gentlemen, it should give you at least the bare basic foundation or the blueprint to be able to go ahead and get your business approved for funding. Now, again, if you're wondering why your business is still, if your business is still being denied for funding, despite you checking all of the boxes I've discussed here, you may want to look into the credit score of your business, not just your personal credit score. All right. Nowadays in 2025, lenders are just not relying on the owner's personal credit report, but they're also looking into the business's credit report as well too. All right. Now there's the business credit reporting agencies such as Equifax, Experian, Duns and Bradstreet, the SBFE. These are specialized credit reporting agencies that report to businesses and report business information. So it's very important that you are aware of the business credit reporting agencies. So therefore, you want to see if there's any errors, any inconsistencies on your business credit report that might be hurting your business and preventing you from getting funding. All right. Just like that, there's errors on your personal credit report. There could be errors on your business credit report, and you definitely want to make sure that you're staying on top of it so it's not hurting you from being able to go ahead and get funding from your business. All right. Listen, if you're getting denied, delayed, or overlooked, this is a sign that you need to start being able to go ahead and take your business more serious. All right. You don't need a new credit card. What you need is to make sure that your foundation of your business is completely set up properly so you can be able to get approved for funding. All right. Take ownership of your structure. All right. Clean it up, tighten it up, document everything, and then go after the funding after you have everything in order so they cannot tell you no. We will not be denied. All right. Listen, if you was able to go ahead and get great value from this video, go ahead and drop a comment if there's anything that you would like for me to discuss in helping you get your business funding. Let me know. We've dedicated this channel to be able to help entrepreneurs and individuals to level up in their blueprint to be able to get funding from themselves and get to the next level. Also, we have a free community. Yes, we have a free community that we put together to be able to help entrepreneurs like yourself to be able to go ahead and fix, build, and leverage your credit to be able to get funding for your business. If you want to be able to go ahead and partner with other individuals who we've helped to be able to get their business properly structured, hit the link down below in the description and join our free community. We'll be able to go ahead and give you all the tools, resources that you need to be able to get your business in order. All right. But other than that, thanks for tapping in. Thanks for tuning in. And always be safe out there and catch you on the flip side. Take care.
Blueprint, yeah. Blueprint. This conversation about building up your blueprint. It's time to take it cause time is wasted. Go grind and chase it, don't lose it. This generation need integration with information to move with. An inclination that is abiding in entertaining improvement. Yep, West Paul with Blueprint. This guests are exclusive. Get on and tune in and then learn some new tips about credit, finance, investment. A nice chance to get rich and buy land. Flip it, quick 9 bands. Learn all the skills from West, he did it. Learn how to build successful business. Run up a mill and get the digits. Run up a mill. Look, safe place where guests are speaking. Based off financial freedom. All facts, no cap, believe it. Podcast, you have to see it.